All right. Hello, everyone. My name is Caitlin Martin, and on behalf of the Tuck Food and Ag Club and the Center for Private Equity and Venture Capital at Tuck, I'd like to welcome you all and thank you for joining our panel on investing in alternative proteins. So let's start by having each of our panelists give a brief introduction of themselves and their firms. Rob, you're immediately next to me, at least on my screen, so I'll start with you.
Sure. Rob Leclerc, one of the founding partners at AgFunder. We're one of the most active VCs in food tech and ag tech. We invest globally, seed and Series A. In addition, we also have an alternative protein fund. Some of our investments are MycoWorks, Black Sheep, Integra Simulate, Fable, Alpine Roads. So I'll kick it off to everybody else.
Maybe Johnny, you want to go next?
Sure. Thanks, Caitlin. Johnny Ream. I'm a partner at Straight On Capital. We're a venture fund invests in early stage, which is seed Series A opportunities that have the potential to transform the food industry. And we focus on 4 pillars. The first is plant-based food and beverage. The second being cell-based or cultivated meat. The third being synthetic biology solutions. The fourth being just general food technology. So, companies that are producing food products or providing products and services to the plant-based or cultivated meat ecosystems. And so we've been investing since about 2015 in this space and have about 40 companies in the portfolio.
Great. And Andrew.
Hi, everyone. My name is Andrew. Oh, I'm getting a bit of feedback. My name is Andrew Ive. I'm the founder of Big Idea Ventures. We have a mission, and that's to basically support the world's greatest challenge. Sorry, I'm getting a significant amount of feedback. Is any chance you guys can mute while?
I've got earphones, so I shouldn't have any feedback on.
Maybe it's the Tuck on the Tuck side. Oh, you are muted.
Thanks.
Very strange. Okay, sorry about that. So Andrew, the founder of Big Idea Ventures, our mission is to solve the world's greatest challenges by supporting the world's best entrepreneurs, scientists, and engineers. We have 3 funds. The first is focused on alternative protein. That's a global fund. We have an office in Singapore focused on Asia, one in New York City focused on the US, and shortly, one in Paris focused on Europe. We have 44 companies in the portfolio to date, and we focus specifically on plant-based, cell-based, fermentation-based meat, seafood, dairy, ingredients and technologies to support that category. The other 2 funds are focused on reducing water, waste, CO2, and plastics in the food system. The third is focused on rural communities by spinning out great breakthrough technologies from universities in the US. So that's Big Idea Ventures. Thank you.
Excellent. Thank you all for joining us. And we have one other panelist who seems to have lost connection, but if Nick rejoins, we'll have him introduce himself. But we'll kick off here. I think I recently saw a stat that alternative proteins had raised just over $3 billion last year. And I actually think all of you are raising money or have raised money recently. Perfect. We'll let Nick give an introduction. Nick, are you back with us? We do not hear you.
Nope. No, muted now.
Any better now?
Yay, welcome.
Great. Sorry for the technical difficulties, but nice to meet everyone. Thank you for having me be part of the panel today. My name is Nick. I'm with Lever VC. We're a global fund focused entirely on this alternative protein sector. So investing both in plant-based and cell-cultivated and related high technology alternative protein companies, both here in the US and abroad.
Excellent. Welcome. So I'll go back and kind of launch into our first question with all of us here. So I think I saw a stat recently that plant and alternative protein companies had raised about $3 billion last year. And actually, I think all of you have recently raised funds and are specifically targeting investments kind of in this space. So maybe we'll start with Rob again and jump around a bit. Could you start off telling us why you're so passionate about investing in alternative proteins?
Yeah, I think what's really interesting is this is just a phenomenally interesting time in technology being applied to food, right? So we just sort of think about it as look at history, and you see this transition of new technologies replacing their animal analogs, right? So it's energy, or oil, electricity replaced whales. We saw, even plastics replacing leather. Obviously, we don't ride horses around anymore. And so I think when you look at the history of technology and food, whenever a new substitute comes along that's better and it beats out on, taste, quality, convenience, health, all those things, that we think that there's going to be a rapid transition from a animal-based diet to one that's either plant-based or cellular agriculture. And the consequences of that, because the footprint, the agriculture footprint is so enormous, economically, socially, environmentally, that this has massive changes. And this basically is the tip of the spear. And so for me, in coming into the 21st century, I think what more sort of exciting things you be doing that will have such a impact over the centuries to come. So I'm pretty excited about just the impact that it could have and being part of that.
Yeah, that's awesome. And I know, Nick, your fund is really specifically targeting this space as well. So I don't know if you have anything to add.
You're right. We're 100% focused on this space. I mean, for me personally, I've been working in the space for 15 plus years. Initial motivation for me was because of the benefits that these products and technologies have for animals. Somebody that was motivated by seeing the animal suffering and wanting to change that and to end that to some extent. But certainly it is a very exciting time to be working in this space in any regard. There's just a lot of new technologies, approaches coming out, obviously a lot of momentum with consumers, and it's pretty clear where things are heading in the next 5, 10, 15 years. So it is indeed an exciting time, and hope many of the people watching today get involved one way or the other in years ahead.
Excellent. And maybe I'll transition here to kind of our next question. And Johnny, we can start with you. But are there any recent trends that you've noticed in this alternative protein space that you find particularly interesting now? Are there any new ideas or approaches that you've seen recently that you're excited about? You can, as always, plug a portfolio company.
Yeah, absolutely. Yeah, I would see a couple of different things that are really attractive to us in terms of trends that we're seeing in the space. The first would be fermentation, both on the ingredient side and I would call it the finished product side. So, using microbes such as mycoprotein to develop like a finished product that is, you can develop these products in a very sustainable and efficient manner. Really exciting what we're seeing on that side. On the ingredient side, using fermentation as a way to produce functional ingredients that play a key role in the sensory aspects of consumer experience. So getting it to plant-based food products to do certain things and getting new functionality out of those products, I think is really exciting. So fermentation is one. Another one that we really like on our side is just clean label on the plant side. So demand for products with, fewer and more recognizable ingredients is something that is a trend we think will continue to run out over the next few years as well. So for 2021, I think those are two we'll concentrate on pretty heavily.
And Andrew, I saw you nodding along. I don't know if you have things to add or kind of agreement.
Yeah, I mean, you'll that feedback's killing me. You'll find that most of us agree with each other. We're sort of all very aligned in terms of why we're doing it and what we're doing across our organizations. Absolutely agree with Johnny in terms of fermentation. We've got some great companies with some really interesting innovations. There's a company called Meli Bio, for example, that's developing fermentation-based honey. So basically, you don't need the bee, you don't need the supply chain, you don't have that reliance on X number of million bees collecting everything. You can create that product using fermentation. We've got another company using the fermentation process to create large muscle whitefish equivalents using myco protein roots. Looks and has the texture and so on of a whitefish, but actually it's mushroom root. So that's going to help from a Seaspiracy perspective if anyone's watched that documentary. We're also quite keen on the cell-based side. I think, 3 to 5 years ago, we were looking at cell-based meat being a $30,000 a pound sort of product. But increasingly, we're getting smarter and more intelligent in terms of how to deliver cell-based meat, seafood, and dairy. And as countries are impacted by, for example, things like COVID, it sort of points a finger to the fragility of the supply chain. And therefore, countries are starting to consider how do they leverage the new technologies to make sure there's protein sources available to their country, despite the lack of potential inputs from neighbors and so on. So I think cell-based is a really interesting category. We've got companies focusing on the growth factor, replacing FBS, especially with plant-based growth factors that are at a far less expensive cost than typical FBS. So FBS has typically been the reason why cell-based is so expensive. If we can reduce that by 80 times, which is what seems to be the case now with plant-based versions, that allows and unlocks the cell-based opportunity. We've seen Singapore approve cell-based meats as generally available, recognized as safe. We've got a company called Just in Singapore who have started delivering cell-based chicken to homes in Singapore. So, I think we're really starting to prove that we can unlock not just the fermentation side, but also the cell-based.
And just to add to that, I think there's an interesting business model when it comes to alternative protein, at least some of it, and food tech more generally. And that is, when they created Oreos, like the Oreo was pretty much done. You kind of refactored the ingredients, but there was no kind of perfecting the Oreo to the best Oreo. And I think with alternative meats, there's two steps. One is to get a product that is, functionally, tastes good, is as nutritious. And then there's a next step to make it even better. And what we're seeing, and we've invested in a couple of companies, Simulate, Juicy Marvels is a couple examples where they came to market with good enough products, right? Like there was enough interest, it was sufficiently good enough, but the entrepreneurs are rolling out new versions of this product, every 6 weeks, 3 months, with a maniacal focus on making this better. So it's almost like taking this like Tesla model and upgrading your food all the time. And that's interesting because, you may see a company that the product is not very good. And, in fact, like Beyond Meat and Perfect Day were reportedly not very good in the beginning, right? And now they're fantastic products. And so as a venture investor, you need to think about the direction the company is going and not just where they are today. And I think that's a bit of a change, right? That your product is never finished and fully baked, that there's a North Star to perfection that is always sort of out of reach.
Yeah, that's awesome. And I like that you touched, Andrew, sort of on different aspects of the value chain. And I'll start with you as we go to this next point. But when you think about the alternative protein landscape, the cultivated protein landscape, where in the value chain do you decide to play, and how do you decide to play there, right? Like Beef Tech is a very different company than like a Mosa Meats, which I think, Johnny, you may have in the portfolio.
That's a great question. So from our perspective, I'm just going to ignore the fact I hear myself. From our point of view, we call ourselves Big Idea Ventures because we're looking for companies and investment opportunities that are global and significant ideas. And that means that we can play within the alternative protein space, whether it's at the ingredient side or actually at the end product perspective. So we get a deal flow of probably about 300 companies applying for investment every 6 months. On a monthly basis, we're getting around 40 to 50 companies applying for those investments, and that's a global deal flow. So we do have the opportunity of looking for those opportunities to make a significant impact, whether that's ingredient or supply chain or whatever it might be from an alternative protein perspective.
Great. And then maybe Johnny, you want to step in as kind of the other end, more, I think you play more on the consumer side. What was the thought behind that decision?
Yeah, it's interesting. You brought up the cell-based side, and I think what we're seeing is interesting. Andrew mentioned a company that they're invested in that's focusing on the growth medium, and we, on the cell-based side, we kind of think about that is the value chain is kind of also being the development process, right? And so I think one interesting thing that we've been seeing is that while a few years ago you had companies that were trying to tackle many different value points in the cell-based space, so everything from cell line development to putting together scaffolds to making the cells differentiate and grow in a particular way, and putting those in a bioreactor and getting it to perform the way that you want it to. Those are a lot of different things, and we saw a lot of companies on the cell-based side trying to tackle all of those challenges. And these are interdependent methods and processes and technologies that you have to use together, and they impact one another. And so I think what it's interesting, we're seeing more and more companies that are specializing in one of those specific areas. And, we're attracted to both. So, like a MOSA that might be trying to tackle more of those pieces of the puzzle, but also maybe more of the emerging technology companies that are out there that are also just taking one small piece of it. And I think there are implications to both. But in terms of value chain, I would agree with Andrew in that, hey, we'll look all across the value chain. It's just where's the opportunity? It obviously has to fit the check size for us and the valuation perspective for being a seed to Series A type of investor. But we'll look across value chain.
I just want to jump in as well, because there's so many students and maybe potential entrepreneurs in the audience. At least ourselves, I can speak for the other VCs on the panel, but we think of large outcomes. We have limited partners. We're trying to get a 3x return. We know that 65% of our investments are going to go to zero, meaning every investment that we make needs to return 10x or greater, right? So we really do look at market sizes. And so for us, we tend to avoid a lot of ingredient companies because they're sort of a derivative or ingredient in somebody else's product, right? And so if you're pennies on the dollar of the large product, they need to sell a lot of those products for you to be a big and important company. So certainly thinking about the size of the market is incredibly important for venture capital funding.
Yeah, that's helpful. And I think as you're talking about kind of the 10x return, what are the biggest obstacles? What are the biggest problems your companies have faced? And how are they trying to innovate and solve around those? And I'll kick this back to Rob because it's going off your prior comment, and then maybe to Nick.
I can't point to systematic problems, right? There's problems that show up that are particular to that type of company. So sometimes it's companies doing R&D. Sometimes they're having, financing problems. Sometimes they're having scale-up problems or trying to get a co-packer, and they can't find the right one. And, sometimes they're just going through GRAS certification. So there's sort of like these recognized roadblocks in the way, not necessarily, company killers, but like things that cause friction and slow you up. And it can come from anywhere. I mean, as a good VC, when we write our deal memos, we write like our deal risks, and those for us are usually like a page long, and we're like these are all of the things that can go wrong. And when things go wrong, we're like, yeah, we saw that one, and it was one of the things. And things like COVID, you don't really expect. During COVID, the challenge has been distribution is a little more challenging, right? So like the Impossible Foods model, where you jump in and start with food service and in a more bespoke way, wasn't really on the table. Large retail grocery weren't taking those on as many SKUs during this time. You have supply chain challenges where availability, if you had specialty equipment or ingredients, you may not be able to get those or get those in a timely manner. And then your ability to work within a supply chain that doesn't maybe work at the speed that you have. So that Ben Pasternak at Simulate is like, look, he wants to run this like a software company and roll out new versions every week if he has to, but like the damn supply chain won't and equipment and the co-packers won't respond in the time and fashion that he wants. So he has to build his own damn plant. You know what I mean? So those types of things. And hiring is probably one of the biggest ones, right? Finding talent that can work within a startup that also knows food is incredibly scarce and really difficult to find. So we're finding those challenges across our portfolios.
Yeah, I don't have too much to add beyond what Rob noted. I would say for us, like for I think everyone else on this panel, we invest for lever both on the plant-based side and the higher tech side, and the challenges are certainly different from one to the other, at least at this point. So for the companies on the higher tech side, I think it's pretty clear that the key challenge over the next couple of years is bringing that price point down to where it needs to be to enter market. And so that's something that's just an ongoing both scientific and technical and engineering challenge in various ways. That's ongoing. I think one of the other challenges for companies things that have to be gone through and done successfully for companies that are at that point on the higher tech side is pilot plant construction and build out and getting that operational so they can start going to market with at least pilot scale quantities of their product. It costs money, it takes time, it's just something you have to slog through and get done. So on the higher tech side, I think those are the two main things, in addition, of course, to the longer term getting regulatory approval and then paving the way for hopefully consumer adaptation of these products. On the plant-based side, I think it's really, probably more simple in a way. It's creating a really good product and really good subsequent products and then selling it well. And so companies are, I think, succeeding to a greater or lesser extent on those things. But obviously there's work to be done in both of those areas.
Yeah, that's great. And I know you've mentioned cost, and I feel like that comes up time and again, especially on the cultivated side. Are there models or kind of approaches that you've seen that have let the cultivated companies bring down the cost of bringing, say, a burger to market, right? I think I was with Cargill when they did the Memphis Meats investment, and one burger was something absurd, like $1,000. So have you seen interesting ways to try to drive that cost down?
I mean, I can step in. So one of our companies, Integriculture, which was why we invested in them. So media is a major problem. You need something like 7 to 40 liters of media for every kilogram of meat you produce. And so if that liter of media is $100 or $200, that factors directly into the cost of the good. And so the ingredients of that are really expensive. And I said, GFI did an analysis of the basically molecular stack, and you have something like transformin, which is $81 million a gram. Like, you don't need a gram of it in there, but you need enough of it that it drives up media costs. So how do you bring down that cost? Because, taking the hormones that you need to stimulate cell growth and isolating them is expensive. And how do you bring down that cost? And Integriculture's solution was basically, look, you have organs in your body that already produce these hormones, right? Obviously, it's a kind of a closed loop system. And so could you co-culture the organs that produce the types of hormones that you need endogenously, endogenously, and then you don't have to bring in exogenous factors, which maybe the consumer doesn't really want to say, like, oh, they're bombarding my food with hormones. It's like, well, it's already in the food. So they co-culture these organs and introduce it into the media. It is a really beautiful and elegant solution to what is really a challenging problem.
Just to kind of add to that a little bit, the growth factor has been one of the key obstacles in terms of bringing the price down. As I mentioned already, we've got a number of companies like Biftech and others who are working on much less expensive growth factors. We've also got companies like a Novel Farm that are looking at bringing those growth factors into the scaffold, so that you have For those that don't know, by the way, the scaffold is either the ingredient or the structure that you build and the cells around so that you can create a piece of meat effectively. So we've got companies working on the scaffold and the growth factor combined so that you can create the meat necessary, far less expensive than, as you mentioned, 4 years ago with Memphis. In addition, we've got corporates who are seeing this as a significant opportunity and are starting to put the infrastructure in place around bioreactors and the other necessary components to be able to scale this industry. One of the challenges we've had is that we've had a lot of point solutions around the world. So teams of 3 and 5 scientists who are working on these cell-based solutions, but completely independent of each other without necessarily any concept or structure around how do they commercialize their technology. So they've been kind of throwing up their arms in the air and getting super excited about the fact that they can do something with cells, but not really taking that next step in terms of how do we take this proof that this, that we can leverage cell to create a cell-based meat and actually move to a scalable, commercially viable business. Now, thankfully, we've seen 2 or 3 companies who are not so much focused on the cell technology as much as bringing the different pieces of the puzzle together to be able to build a commercially viable business. So they're not trying to do cell or bioreactor or growth factor. What they're trying to do is bring the different technologies together so that they can move to a large and scalable production method around cell-based.
I just add in one additional point, and Johnny touched on this a little bit earlier, but another way to get the price down in addition to some of the things noted is when the final product is not 100% cell-cultivated. So certainly we've invested in companies taking this approach, and there's many others out there where what they're looking to bring to market is either an ingredient into a plant-based product where you have an animal protein that's playing a functional role, but is still a small percentage of the final product, or something that's just a very intentionally blended hybrid plant-based / cultivated meat product. If you go to Singapore and you have one of the just chicken pieces, it's not 100% cultivated meat. It's mostly plant-based meat, and there's some cultivated material in there. And similarly, there's companies. I mean, from our portfolio examples, will be companies adding cultivated fat or dairy proteins to plant-based dairy for functional value, things like that. That take up anywhere from a few percentage points to 5-10% to maybe 20% of the final product. So obviously that really dilutes down the cost addition you're getting while still giving 80-90% of the functional value, whether it's taste or something else, of those proteins.
Yeah, this is great. And I feel like one of the other issues that I hear about kind of the alternative protein space is the consumer skepticism around it, right? People don't always want to eat the plant-based burger. They want the real hamburger. And so maybe, Johnny, we haven't heard from you in a bit, but how have you thought about overcoming this challenge? How have your portfolios kind of, what do you think the keys to success here are in trying to that adoption?
Yeah, that's a great question. I mean, I think a lot of it comes from the marketing side and making sure that you have companies that are speaking to the larger population rather than just vegans or vegetarians or people that are already, consuming these types of products. And so I think that's key. Like have a good voice. These companies need to have a good voice with the consumer to sort of meet them and help them understand the products. But I would also say that, consumers are, I would say this space is being consumer driven, not by all of us venture capitalists, right? We have a consumer that is becoming increasingly aware. They don't just want a great product, but they want to know how is it sourced? How is it made? What are the impacts or the consequences to me making this purchase or consuming this product? And so I think as that trend continues, the more self-aware consumer will be a tailwind in this space as well.
Yeah, and I think
Go ahead.
I would just add, I just think these markets are so big, you don't need to satisfy everybody on day one, right? You need an audience. You need to find the first 100 people that love it, and then you need to find the next 100 people that love it. And so you can work on the marketing, the messaging. There's enough of an audience out there that wants these products that, you know, you can grow into a larger market.
But I think the onus is on us and our companies to deliver great tasting product with the right texture and the right price. If we miss the target, and you know, ultimately this isn't going to work. So, you know, I totally get what you're saying, Rob, about being able to iterate and optimize and improve. But if people are given the choice between a delicious kind of traditional burger and something that doesn't quite hit the mark, eventually or ultimately they'll go for the burger. So it's our responsibility to deliver a product that does hit the markers in terms of taste, you know, sensation, price, smell, all of the other necessary ingredients to be a great product.
Yeah, but you don't have to get everyone on day one, right? And I think, you know, the important part of this is that I don't think people have any particular allegiance to the slaughter of animals for their food, right? And so just imagine a world, right, where you can beat on taste, texture, convenience, you know, health. Why would you eat meat is really the question, right? It's like if it's fundamentally a better product on all of the aspects that are important to a consumer. We're not there yet, right? So there's a lot of reasons where you would fall short. But when you do, I mean, I think the vast majority, and that's, you know, 10, 15, 20 years from now. So between the education period, the on-ramp period, I think there's an obvious and inevitable switch.
I think the point I was making is that education isn't what's going to make people repeatedly purchase a particular product. It's the taste, the sensation, and the price. And if we fail to hit those targets, they'll try it once, maybe they'll try it twice from an kind of an ethics perspective, but in terms of making it part of their daily diet, it's not going to happen. So it's our responsibility, and the companies we invest in responsibility, to deliver great products as quickly as possible and as consistently as possible.
Big challenges. I would love to see a world where, you know, it doesn't take a cow to have a hamburger. And actually, on that, is there consumer discomfort around the thought of cultivated, right? Or are people seemingly comfortable at this point eating a hamburger that grew out of cells? And maybe Nick, I'll direct this first to you, or Andrew, you came off mute.
So the only point I was going to make is that I think it's regional. So I think in the US and Europe, we've been sort of educated that anything even remotely GMO is bad. Anything that's sort of not grown in a, you know, kind of traditional farm setting, frolicking around in the sunshine is somehow not good, despite the fact that most of the meat we consume here is certainly not frolicking around in a sunny, you know, yard. It's in a factory type setting. Whereas in Asia, I don't think they have that resistance to something that's different. I don't think it's a surprise that Just launched their cell-based chicken in Asia first, and it's where they gained approval first. So I think my personal take on it is that cell-based will take off and be particularly successful in Asia over the next 5 to 8 years. I think it's going to be more challenging unless it's, and this comes back to one of the things Nick was saying, a hybrid approach where we use it as an ingredient within a hybrid product. Then I think it could work within the US or Europe. That's my personal take on it.
Yeah, happy to build on what Andrew just said. You know, if you look at surveys that have been done globally, and there's been a good number, I think 15 to 20 at this point, around public opinions on these products. The percentage of the public that says they're interested in having these products will really vary. I mean, we've seen anywhere from, in the West, 20 to 55% being interested, varying based on the country and also, quite importantly, the way that it's worded, which speaks to regional differences and then also differences in how it's presented to the public. Even as simple of a wording change like cultivated meat versus cell-based meat gets significantly different levels of consumer interest in trying the product. And then to Andrew's point, if we look at surveys done in Asia, we see the numbers go up a lot. So some of the highest numbers we've seen in the West have been in the 50 to 55% interest range. In India and China, it's just over 70%. And we've seen that across a couple of studies, at least for China. So indeed, I think I agree that there's some regional differences there as well. For those who are not interested, the reason is what's noted. It's this perception that these products are not natural. And so I do think that's something that companies in this space and the sector in general is going to need to have a good marketing narrative to get through and to work through. One other thing I think we should all keep in mind is that at the end of the day, it's not like most consumers, when they're making a buying decision, are making a very conscientious, informed choice based on some sort of principle or belief. You know, if you ask Americans what do they think about GMO ingredients in food, more generally speaking, a very sizable percent say they're against the idea, they don't like it. But if you look at the studies done on what happened when GMO labeling was introduced in Vermont, for example, zero impact on consumer purchasing at retail, literally zero impact. That was measurable. And so what people say they believe doesn't necessarily line up with what they actually do, which I think for this sector is a good thing, because as these products are hopefully reaching or exceeding the taste and functionality of conventional animal proteins, and hopefully if they get to the point where they're price equal, or perhaps in some point in the future even cheaper, those are the things that will drive consumer decisions. There will be other factors. And so I don't think for this sector to take 1, 2, 5, 8, 10% of the meat protein market or dairy protein market, I don't think it involves convincing that percentage of people to make an informed, deliberate choice. More just getting better tasting products in the market and building a good branding, marketing message around those things.
I'd just sort of add that the frequency of purchase is going to be, I think more important in the short term. So making great products that people purchase again and again and again, and not just the market size. If 50% of the population buys it once every month or 2 months, that's less of an outcome than 10% of the population buying it, for all of their meat needs. So.
Yeah. All right, I'm going to switch gears as we sort of wrap up the panel. Lots of students tuning in, number of entrepreneurs. What advice, and we'll actually just go around the circle here. What advice do you have for folks who are looking to enter the space, either from starting a company standpoint or just a post-graduation career in alternative proteins? And maybe Rob, we'll start with you, since you're sitting next to me, at least on my screen.
All right, I'm the big winner here. So one, VC, we're in the people business, not necessarily the idea business first. So make sure that you have an exceptional team around you. Would be the number one thing to be venture backable. But then let's get into the idea. I think N of one is going to do a lot better than one of many. And so you want to be differentiated. And then big market as well, right? So it's team, product, market is the trifecta that we're looking for. And you have to be exceptional in all of those. And don't forget those ones. So it's hard, but I'll pass it on.
Yeah, I think Rob makes great points. I would just add, if you're an entrepreneur looking at starting a company in this space, I would simply just talk to as many other founders as you possibly can, as you get a sense of the space, try to understand where the opportunities are, where the critical needs are. And I think that would help formulate sort of some theses about where would be some really interesting things to play in the space. And then in terms of students out there that want to get involved, I think we have a lot of high growth companies out there that are going to be hiring. So it's a great thing. I think there's a ton of opportunities out there. I would utilize some of the great resources that have been developed from the Good Food Institute and other organizations, just to familiarize yourself with the space and understand the challenges that we're going to try to overcome over the next 12, 18, 24 months. Like I said, utilize those resources. There's been some great ones that have been developed in your path forward.
So I'm feeling sorry for Nick, because by the time I've spoken, Rob's spoken, and Johnny's spoken, there's not going to be much left. Anyway, The only thing I would add to all of the wonderful things that have already been said is that there's companies like ours, accelerators and early stage VC, who really do want to help. We're really keen on supporting entrepreneurs starting and growing their companies. So as well as working and talking with other founders and so on, reach out to people like me, whether it's through LinkedIn or our website. If you're keen on starting a company in the alternative protein space, we'd love to try and support you, give you some advice, help you connect us with some of our companies in our portfolio and so on. We've got a kind of global network now of resources, mentors, and people that we can use to help you. If you're on the Asia side, there's us. Obviously, there's Nick. He's very much involved in the same space as us. I'm sure he'll tell you about that in a second. But there are folks like us who want to support you and want to help you. So just reach out. We're always open to chat.
Yeah, I would just add a similar note that while for Lever VC, we're a pretty traditional, typical early stage VC fund, we have helped a few individual entrepreneurs launch companies in the space. And so if you're thinking about doing that, definitely feel free to email me personally. I'll drop my email in the little chat here. Doesn't matter if you don't have an idea. If you're somebody with the right background and personality skill set, you definitely have what it takes to build a successful company in the space. So happy to chat with you just to share what advice we can.
I think Nick did a great thing there.
Yeah, this was phenomenal, and thank you all for your time and your generosity and sort of sharing these insights with us. Looks like there are some great resources in the chat on the side. So for folks who are looking to enter the space, here it is. All right. Well, we are going to wrap with 1 minute to spare. Thank you so much again, and we have our next panel starting in 1 minute.
Thanks all. Thanks, Caitlin, for having us.
Thanks for being a great moderator.
All right. Thanks, team.